30-second chart, that's not something I look at often.
Very granular.
Very right. I think
But
1
you watch
minute.
Bookmap, don't you?
I do have Bookmap, yeah.
So you could kind of say that's probably sub 30-second even.
Yeah, that's like pretty much live, right?
I think that's considered a tick chart.
Wow, some of them guys
I just
with 5 ticks on their tick chart can't do that.
stream started less than a minute ago. So, all right, cool. So, welcome to the Wall Street Jesus Flow Show, everyone. Like we have been for the past few weeks, we're going to steal about 10 minutes and go over some important things that have happened based on our new morning newsletter, the Wall Street Jesus Daily Brief. And today we're going to talk about a concept called the 30-second opening range. And the way we're going to start talking about this is if you see in the newsletter here, what you can be looking for. This is something that happens, I don't know if it happens on a weekly basis, but if you are a subscriber to the newsletter, this is something that you will most likely see over and over again. And it's something that could offer a pretty good opportunity for a high probability trade. So, Dave, when you are writing here that the overnight session is very long, what does that mean?
Well, it means all the inventory from the close, the regular session close, 1600 Eastern or whatever is above, so all the trading that's been done is technically long above the close from the previous day.
Okay. And what kind of implications does that have for the market when it opens?
So the overnight session is typically smaller traders. There's a lot less liquidity. So we know that large traders aren't, coming in to do their business at 3 a.m. whenever there's 5 people sitting on a bid and offer. And a lot of times that trade is in reaction to what's happening in China or Australia or Japan, Europe. And so it's not necessarily reflective of U.S. markets and U.S. equities, right? So we look for those traders to be weaker traders. The market's moving up with global markets. We have other things going on here, other catalysts. And we'll see that actually correct. Those people are long from the close. At the open, we may see that very often. We do see that trade back towards the close, whichever direction that may be.
So when you're saying the overnight session is very long, it's not actually like a bullish signal, right? You're actually looking for a counter move to that, where you're actually looking for a correction of that inventory. Is that correct?
I would put it more that I want to be aware of the possibility for correction. So, one of the things I said in the newsletter, the first thing on the gap rules, go with a gap that doesn't fill. So I'm looking long, but my first job is to see, okay, we might see some people taking profit, right, into the into the open. People that were long from yesterday and decided it's a good place to take profit. So we might see those people coming and selling, and we might see people that are long from European session. The Asian session will be closed. We're getting the later part of the European session. Maybe those people will take profit. And as we see that selling come in, is it going to take out some of those people that want to be long that are weaker traders? So it's really, hey, we just need to watch out for these weak traders and see if there's a correction. Not necessarily expect a correction or even want to trade that correction in all cases. The bigger gaps are an exception where I actually get excited about trading those corrections. Most often, I just wait for them to play out.
Okay. Yeah. And the one that we're going to focus on here today is number 3 here, where it says, look for a correction of overnight inventories towards the gap fill. We often trade this as a 30-second opening range breakout or breakdown. So what is the 30-second range to people who are maybe not familiar with the different type of opening ranges?
Well, it's just the first 30 seconds. It's a little difficult to watch on most
Yeah.
platforms, but you do have
Mhm.
the 30-second chart there. So I'm guessing that's first bar is 30 seconds, correct?
Yeah, so it's the range is just the high and the low then of the first 30 seconds. So even if you don't have a 30-second chart, you can literally put a timer at the open and then measure what's the highest price and the lowest price in the first 30 seconds, right?
Yeah, and there's some people that trade only this. I'm sure people are
Mhm.
familiar with Pax Trader. Like that's
Yep.
his whole thing is trading a 30-second open range. And it's I'm not going to go deep on this because I'm going to mess it up. But the actual CME watches a 30-second range. They record it. It's a number that people watch. I trade it because it's a good entry point a lot of times on days like this whenever we've gapped up or down.
Okay, got it. So this is that bar that we're talking about here. So I'm just going to zoom in. So literally here we have this opening 30-second range, and obviously when this second bar here breaks the low of that, you have a breakdown of the 30-second opening range. And I believe you mentioned this word for word in the newsletter here, where let me see if I could find it. Let's see. It was here, right? Possible correction of overnight inventory. Look for buyers at the half gap. So this is the target, right? And then this is the blue line that we're seeing right here. If I can find the label, it's pretty far away, but this is the half gap, right? So I believe you traded this this morning, Dave. So did you do exactly that? You were just waiting for the 30-second opening range, and when you saw it breaking down, you went short?
Yeah, that's simple.
It's that simple?
That's simple.
So this is something that's like a pretty reliable, high probability trade, and that's something that our newsletter readers should be aware of. Anytime you are pointing out that the inventory is, either very long or very short from the overnight session, right?
Yeah, and it's a high reward to risk trade, and that's
Mm-hmm.
obviously what I prefer. I didn't get anywhere near the reward out of it that I should have, but it's there.
Mm-hmm. Did you use a market order, or did you set a limit order at the bottom of this bar, and then when it crossed through, you got filled?
Yeah, I just mark it in generally.
Just mark it in and you see a break, and then just go for it. And
Yeah.
you can do that in the ES, right? Because it's liquid as the sea, so you usually get pretty good fills. And then did you take your position off here at that half gap, or did you actually go for more?
I took some off on the first push down,
Mm-hmm.
and I don't remember exactly where that's at, but I took some off on the first. It's probably about halfway to half gap, just to
Mm-hmm.
take some risk off.
Okay.
The highest reward part of it is just let it run, right? But I took a little bit off, got some risk off, and then the rest off at half gap.
Got it. Okay, well, that's pretty straightforward, and something that we wanted to come here and point out, because anytime we can give you guys, high probability trades that are measurable and repeatable, that is something that we like to point out. Another thing that I was paying attention to here is our sigma levels, right? So I'm going to go back to a 5-minute chart here just to tighten things up a little bit. But one thing that I have noticed is that, and then here are our Steamroom levels, which you can also get in the newsletter every day, because we know most of you people are too lazy to do your own levels. So might as well have Dave do it for you. I mean, I know that I am, at least. So I think that is one of the main benefits of subscribing to the newsletter. But one thing that I've noticed, and Dave, you can confirm if this is just anecdotal or if this is actually correct. When I see us opening up above 2 sigma, we usually come and back test it. So another trade that I think is pretty high probability is, like, anytime you see us opening up here, it's a pretty, could be a decent idea to just target a short back to here, because you usually don't just open up above 2 sigma and continue higher right away. Of course that is possible, but most of the time I see when we open up, we actually come back and check this level. So seeing where the futures opening around 27, right? You have range all the way down to 16, which is 11 points. That's a pretty decent trade with a few ES contracts. Is that something that you've seen as well, Dave?
It is, yeah. I don't trade that specifically, but I know exactly what you're talking about.
Yeah, cool. So then you pretty much got 2 high probability trades right there. You have targeting a backtest of the 2 sigma anytime you open up above the 2 sigma up or below the 2 sigma down. And then anytime the inventory is mostly long or mostly short from the overnight, you can play the 30-second range break.
Yeah, we also got some good bounces at the levels, even though it cut through them, right? We got some good bounces of it. And then we had a back test at that 97 area where we saw some more selling come in. So the levels and stuff reacted well. I didn't expect to see this kind of weakness, but we did have that balance in there, and we ended up trading right back into that balance.
Yeah, you can see it. You can see it right here. Where this level we actually. So here we got a nice bounce at that half gap, and then when you break through it, we back tested it here and rolled over. It's always good to see that the levels are respected on the back test as well. Here there were programs running, and when programs are going wild, I don't think there's really any levels that are really going to be respected. Programs are rude. They just run through levels with no problem. But then you can see this level right here was obviously really nice, pretty much close to the low here, and got you a really nice bounce. So it's good to see that the levels are working. We're pretty proud of these levels. They've put a lot of work into them, and we're giving them to you guys for $29. So I think that's a pretty fair deal. I'm going to drop the link in the chat here to sign up for the daily brief. You get the first 7 days free. So just click the link to sign up, start paying attention to the levels, start paying attention to the trading scenarios, and let us know if you have any questions.
Thanks a lot, Norse. Thank you, Jay.
Thank you, Dave.
Thanks, guys. Enjoy the rest of your night.
Thank you.
Later, brother. I was running. I gotta share my screen. Oh, where am I? There we go. All right, I was running a little late there, but Norris gave me a chance to gather some shit up. So let's take a peek. What came out? Costco and what else? He had something else today? Or just Costco? Just Costco, right? A never-ending earnings season. Costco down 5, so basically unch. What the hell's going on in this chart? Senga! He killed me. All right, hold on a second. Let me make sure I got all my shit here. This is muted. And grab your coffee if you haven't already. All right, a few things to talk about because you get some interesting dynamics at play here in the market. Certainly bullish. Let me take some of this shit off my screen here. All right. So what we have going on, I think, listen, this, again, my feelings on this chart indicator, however you want to phrase it, but I think this right now with the news at hand is the most important chart at hand. And this is hedge fund exposure in individual equities, single names, right? You guys know we look at it every week, so obviously I feel it's significant on this webinar. We look at it every time it updates in the room. But even more importantly of late, because if you remember the last webinar, we had the conversation where I had my tinfoil hat on, and interestingly enough, last Thursday, okay, very similar to today, actually, the overnight session was rather quiet, almost as if the market was waiting on some news, right? When futures opened up around 6 o'clock, pretty flat, little lift. I'm talking about last Thursday now because I remember it pretty well. And then you got a rip in the middle of the morning hours, like 2 in the morning, 3 in the morning. And what was interesting about that is when the data updated when I saw the data update of hedge fund exposure in individual names, they legged into more short exposure. Okay, again, I'm referring to last Thursday. And what was interesting about that is almost as, again, I highly doubt that was the case, but it was almost as if the market was waiting to see if hedge funds got squeezed and maybe chased the rally a little bit off the Fed. And if they didn't, they would kind of push the market away from them even further, right? And that was a week ago, right? So you got a nice rally on that Thursday, I think Thursday and Friday last week, if I remember correctly. And you had a very similar setup going into last night. Okay, futures opened up flattish. You had a little more of a lift, I think, in futures because you had Micron earnings, but there wasn't really a big reaction to Micron earnings from what I saw. And then you had kind of a slow lift throughout the night. And then once again in the middle of the night, but this time, obviously, you had some more pumpage out of the PBOC in China, which was the big news. And we'll talk about that. But we got another update on this hedge fund indicator. And as you could see, they not only didn't cover short exposure, they added even more short exposure. Okay. So you have now a market rally here, right? A Fed surprised the market, cut a half instead of a quarter. Okay. A lot of things, caught some pretty decent moves to the upside, right? We talked about there's quite a few, and something else we'll touch on quickly. Quite a few upside niners, as we like to look at, signs of potential exhaustion in some of the indexes and names. But at the same time, okay, you have a big proponent of the market on the professional side that has yet to even start covering shorts. And the reason why I lead off with this again, in my opinion, I think they have to squeeze this component out of the market. And in other words, for us to see any sort of breather. Okay. The only, in other words, with the information we have at hand, right? If you get some sort of exogenous headline that's more important, obviously it takes, the primary focus away from this. But with everything we're aware of now, right? Because you kind of had those economic fears. You had a question on what the Fed may do. Those questions still linger. But, they kind of been pushed aside a little bit. People aren't stressed as much as they were about it. And I think any little weakness that you see out there is probably going to find buyers because they know that this part of the market is still short, still has to cover shorts, if not even possibly get long. Okay. I think the tricky thing at play here is where are they short and which facets they get, which parts of that short exposure do they get squeezed in, aggressively. Example, we just saw China. China was the most shorted thing in global markets. Okay, if you look at some of those survey measures from BOVA Fund Manager Survey comes out once a month. The most crowded short trade was China, right? I'm sure a lot of you saw those charts being posted over the past few days as the China markets, equity markets have squeezed hard, okay? So I think that is only going to add even more fear to these other parts of the market getting squeezed. And that's where this money's short for the most part. They are short in cyclicals. They are short in anything economically sensitive. And that's where we're seeing a lot of these squeezes take place thanks to this China liquidity pump and talk about them getting involved fiscally, right? So again, why I feel it's the most important, any bear out there that's looking for that window of opportunity, thinking we've just come too far And you may be right, especially in certain parts of the market. We'll probably start to see on an individual name basis, things start to get tired a bit. Stocks that are up literally in a straight line for 2 straight weeks. But what we're more than likely going to see from this point until they get squeezed is this constant rotation where the money's going to continue to find a home, and you're going to be on insta dip buy in a lot of these cyclical, heavily shorted parts of the market. Okay. That on top of, you got a little bit of excitement again in that, I would say that underbelly AI camp, even more so than the big guys, right? The big guys, everybody's in these names already. That's kind of the issue with the NVIDIAs of the world, just in general, the semis. Most non-tactical traders, right? Most buy and hold players or institutions, they're already well in deep to these names. All right. If you're an institution, you don't own NVIDIA, you're in big trouble by now. Okay. So they already own these names. They're sitting on a monster pile of cash looking where they can start to deploy some new funds. Right. And especially now that the Fed's cutting rates, some of that money, not all of it, but some of it's going to come out of money markets and go into equities, as well as other things out there. So as that starts to happen, that money is starving, looking for a home. Okay. And when you have things like this, where overall exposure, they're just not exposed to many of these areas, you're going to have that bid in the markets not going away, even over the intermediate term, I think, until you see these hedge funds capitulate, cover shorts, and more than likely flip to the long side. Okay. So that's where I would, I think anywhere off any weakness, and we're biased, we look at sweepers in the Steamroom, right, for kind of a gauge on where we could look off any weakness. But anything that sees decent sweeper activity off a dip in any name you like, I think is tradable at this point. I think the areas where the larger opportunity may be at play is, some of the stuff that's not known about, some of the stuff that's underowned. We're seeing some of these utility / power names explode, right? I mean, some of them were already have exploded and exploded more. So you're starting to see an interest there, right, spread a bit. Even some of the more speculative power miner, Bitcoin miner plays have been catching a bid. They haven't really been seeing any quality flow as far as action is concerned, more of put selling and more of short-term speculative type buying, but starting to see an interest again, This names like a COHR, which we talked about recently, CARR. I think that group, right, that hot growth group that's underowned is kind of the sweet spot in the market right now. The issue is, do we see enough names that catch the interest of these players? Okay. So again, I think first and foremost, we need to see a squeeze here before the climate changes. Okay. And we'll talk a little bit about the climate as well. So you guys get an idea. Here's some of the China charts you probably saw circulate over social media the last few days. You could see here, this is China net exposure in Chinese stocks, all-time lows, right? So when you get finally some capitulation out of the PBOC, for those of you who don't know, I know most of you do, that's the central bank out of China, their Fed reserve, basically. When you get finally some capitulation there where they're willing to light the match, and now even talk about getting involved fiscally, which was, a big portion of it. This is what you see. You get these type of moves where you just get an explosion in a matter of days because of that lack of exposure, right? And what those of you who follow the flow, what have we been seeing over the past week, right? ridiculous amount of call activity in a lot of these China issues, right? All chasing, right? We even see more activity into strength. Well, it's been all strength, but you see an uptick of activity into strength. Why? Because if you're running a hedge fund and you have no exposure to China because of the reasons I just mentioned, and now that backdrop has changed, what's the quickest way to put on some exposure is through the options market, right? That's the only place you're going to get exposure on quick. So that's why we're seeing, on top of short squeezes, these things have been shorted and profitably shorted for a long, lengthy period of time. Okay. Well, I think the next step from here, and we'll talk about the flow in this because a lot of the flow out there is in China-related stuff, even U.S. companies related to China, cyclical industrials. I think what we need to see is that the next time we see a little bit of digestion here, a little bit of weakness, some profit taking, what's the flow look like into that, right? Maybe it goes quiet, and maybe that's a tell that it needs some more digestion, or maybe they just come in right away into every little pullback because now they want to own these things. When you have guys like Tepper make a comment a la 2009, what he said about U.S. equity markets, it's a buy everything type of moment in China right now. More than likely, you're going to see a lot of this stuff be supported into weakness. So that's, I think, the interesting thing to watch from this point, right? Because you've had this big move in a short amount of time. But that's the type of move you get when you don't have exposure in large places like that. The credit markets and some of the signals we look at out of the credit markets, again, nothing different there. They're not signaling any sort of problem. And not that they have in quite a while. I think an issue people were kind of paying attention to, they were wondering why the Fed would cut a half when they really didn't even want to cut at all the meeting prior. Was there something that they saw out there, right, that we don't know about? Is the economy slowing more than we see it through some of the data? And, the credit markets were signaling the complete opposite, right? Complete opposite. There wasn't any widening out in swaps. Credit spreads are pretty tight overall still. So nothing out of the credit markets was signaling any acceleration and slowdown. And I think that's what's led to this bid in equities as well. So the credit markets, especially swaps, have been on bull signal pretty much throughout. Credit spreads, there's been a divergence there. Again, nothing major, not aggressive widening of the spreads that would signal some sort of problem at play. But you could see the divergence, and we talked about that. And I mean, for us to see that full participation type risk on rally, especially with small cap involvement, right? Small mid caps, I think you need to see credit spreads cooperate, right? And in other words, not diverge from the overall price action. So we kind of have this divergence going on a little bit better in recent days this week. But I think that's why you're still seeing the Russell really not be able to gain a whole lot of traction yet. Because once you do, and you get these things to line up, that's when you'll see, I think, the start of a potential new bull market in small cap land. So we'll see how that shakes out. But that's been an ongoing problem. We talk about Sharpies, again, commercial hedgers in equity index futures. They were slapping on hedges into the recent highs before the most recent pullback we had. They kind of covered those hedges, as you can see here. I think the S&P 500, they are net long. I think they're still slightly short the NASDAQ still. But overall, in equity index futures, you can see they have no hedges on. And you have an equity market at new highs, and commercial hedges have no hedges. That is not bearish. You know what I mean? That is not bearish. Because again, their job, they look to hedge as a market strengthens and makes new highs. the majority of the time they're putting on hedges, because what's usually happening is as a market continues to make new highs, more and more, there's more and more involvement, right? And that's where they take the other side. Usually when the hedge funds are getting long and the retail crowd's getting long, that's when that commercial hedger, that Sharpie crowd will start to continue to slap on hedges. I think because of that lack of involvement, especially out of hedge funds, Sharpies aren't looking at the market, even though it's at new highs here, as being everybody all in, right? So I think that's the main takeaway here from Sharpies. Again, we get a new update tomorrow, but up until this point. Okay. What else we got here? That's so here's some of the short-term stuff. And again, we'll dive into a little bit of the market, individual names and stuff like that quickly after this. Here's some of the short-term stuff we look at. This is the short-term composite indicator we look at for kind of a gauge on short-term sentiment. You can see quite a nice snapback with the equity indexes, right? And we kind of stalled out here. A little bit elevated, but not in caution territory just yet. So there is some room for a little bit more upside if this market does want to go higher. So again, not an ideal setup of sentiment, but you're not going to have an ideal sentiment at a short-term, an ideal setup out of short-term sentiment with a market at new highs, obviously. Okay, but right now we're not getting any major sell signals here. Obviously, if the market continues higher from this point without a little digestion, we will get that. Okay. This is a little concerning, right? You got and this has a lot to do with the cyclical part of the market and the chase there. You got a lot of these equity and put to call ratios that are really have melted away here the last week plus. And again, the reason for it, in my opinion, is you have these, again, that lack of exposure in certain areas of the market, and they need to get exposure on rather quickly. They scramble and buy calls, right? So that's why you're getting some really low readings, especially like equity put to call and stuff like that. And you'll see when the cyclicals lead, right? When kind of the broader market leads, you'll see the equity put to call get smashed. But when you see that rotation back into like the mega cap trade, right? Kind of that safety trade in a sense, that's when you'll see the equity put to call start to level out a bit. Because again, that's an area that most players are already in, right? They're not scrambling for call exposure in and in NVIDIA, not more than a day, let's say anyway, because they already own these places. So that's why we're seeing the low equity put to call here and some of the other put to call ratios. Is it an issue? Yeah, it becomes an issue because that's risk. What it really signals to us is that you got a lot of stuff on an extreme short-term basis, right? In individual names that are extended here. Okay. Could they extend a little bit further? Of course they can. All right. A stock that's up a week straight can go up 10 days straight. But the more that extends, the more risk that you would incur by starting a new position in anything that's already moved like that. All right. So again, I think the equity put to call, like a lot of the other stuff we see right now, is telling us to kind of focus on stuff at better spots, better setups that haven't ripped as hard, and try to, if we can get it, try to look for things that are possibly red, right? Instead of chasing green, even on a more tactical basis. So that's, I think, the main takeaway here, as far as the equity put to call is concerned, but a little too low for my liking, definitely. And this is, I think, this is like, we kind of touched on this last week. This is kind of part of the issue we're facing right now. Is not only you got the S&P 500, flashing upside niners, some of the larger names flashing upside niners. You got the equal weight S&P 500 on an upside niner here. You got a lot of different things out there showing flashing some of these exhaustion signals. All right, so it makes it difficult because a lot of times, unless it's a really, really strong trend, and usually it's the first rally out of a decent correction where you'll get things run through Niners, right? Because you just flushed everybody out, everybody puked, and now you got this snapback chase, right? But as you get further along in uptrends, it's really difficult for markets and stocks to pull away from these upside Niner exhaustion signals. It's almost like there's a magnet to it, right? You'll see a stock pop and you're like, oh, look, it's ignoring, some of these exhaustion signals, but then you get fades out of nowhere, right? We kind of see it in the indexes. You kind of see it in a lot of different names off Niners here. So it makes things really tricky. It makes things really tricky and frustrating because you got kind of two things you got to deal with here. You want certain things that you may have traded or missed to pull back, right? So you can get another opportunity in them. And at the same time, you can't chase them because if you're chasing a gap up, you're likely going to run into a decent fade, and you don't want to do that, right? The risk reward is pretty poor too. So that's a lot of the market right now. That's the issue we face here, which makes it very frustrating. Very frustrating. I had one more thing here that relates to it. On top of that, right? So you got these upside exhaustion signals in a lot of different areas. This is gamma, right? This is likely going to remain like this to the end of the month here. You got gamma pretty elevated here, right? And most of you are well aware of gamma these days, and the dynamics of gamma. I don't want to get too wonky for people who aren't, but basically market makers, the way they hedge off elevated gamma into strength, they're sellers, and into weakness, they're buyers, right? So when you get gamma at extremely elevated levels, you get this really sticky price action. And the best trades usually set up from these overnight moves that overshoot, okay? Because during real market hours, right, not in the overnight session, you really get these tight ranges, right? Pretty much what we were seeing all week up until last night, okay? And then you get some news overnight and you get a pretty decent move, but boom, as soon as the market opens in real time, you got gamma back in play here again, right? So it's kind of, if you do get a little overshoot in either direction, that mean reversion setup is the way to approach it when you got gamma up at these levels. But it's not easy. It's not easy. A lot of us, and I'm not a big ES or SPY trader or overall market trader, but a lot of people I know who do trade those instruments will focus on individual names and try to find more movement there than the overall market because of this price action. So this is likely going to continue until the end of the month here, and then let's see how things look. Right? Let's see how things look. And one last thing, I think that's a good segue before we get into going forward, how we're kind of set up here. If you remember, we touched on this, right? Hedge funds aren't buying, institutions aren't buying. The only buying that's been out there has been buybacks, right? And that's corporate. You can see off this BOVA chart. Institutions, right? They actually did a little buying for a change. Now, this is for the week. You can see hedge funds, we already know that by looking at the other stuff. They had no interest. Retail had very little interest. Institutions actually did a little bit of buying. Right? And again, I think that we're seeing in the market, you're seeing some of these more cyclical names, right? Stuff outside of the mega cap stuff acting better, or seeing strength, I should say, the better way to put it. And a lot of these long only funds, institutional money, they start to put some money to work. Okay. We hope and have been hoping this is the start of a potential trend. Because if it is, you kind of get that true risk on, true bull market feel, right? Better participation, breakouts under the hood, new names. You get all that, right? Because that's institutional buying instead of this constant rotation and recycling of names that we've been seeing. But for that to happen, that's institutional money that usually propels that. All right. So a week, we've seen this. We saw it at the end of, we saw it earlier this spring. We saw it at the end of last year into the beginning of this year when institutions did a decent amount of buying, I think for a good maybe month and a half. And then they just hit the brakes and kind of unwound all of it. Right here. Let's see. Because I remember that. That was annoying. Here. 22, 23, right here. Right? So you had this downdraft where institutions were continuing to sell, and then you bottomed in October, and institutions did some decent buying here into the beginning of the year. But from that point on, even though the market continued to push higher, institutions use that strength to just continue to sell into and continue to crowd into those Mag 7 names at the time. All right. So I think it'd be a good sign if we start to see some of that institutional money come back into equities, because that's where a lot of us stock pickers will kind of see the action that we want to see. All right. So all in all, right, I mean, this is how I think it shakes out. I think, again, we talked about this the last couple of weeks. I think McElliott's been right on top of this, right? You had a setup going into this September OPEX. Okay? It could go either way. Either the market would get hedge funds and the rest of them to cover their shorts and chase, okay, into that September OPEX, and then you are set up and it opens the door for a decent correction because now you have systematic funds all in, CTAs all in, hedge funds no longer short, and OPEX, you get that roll off in gamma and everything else, right? That didn't work out that way, right? Even with the Fed cutting a half, it didn't work out that way. Hedge funds added to shorts, okay? CTAs and systematic funds still had room to add long exposure. So now that kind of postpones things. And not only postpones things, it actually does the opposite. Maybe not to the same magnitude, but creates a bid in the market, right? Because now all of a sudden you have a setup where the Fed cuts a half, and now you got the PBOC doing their thing, and players aren't exposed enough to a lot of these areas in the market. And honestly, that's what we're seeing right now. That's what we're seeing right now. So I think the question becomes, when does the market force these guys in? Right? And McElliott has pointed out that October OPEX becomes a big one now too, because if you go into that October OPEX with that setup of everybody long and extremely long, you can have that scramble for protection insurance ahead of the election that can really get aggressive. So I think that, and again, that's not just me, it's him saying it, but that's probably the next hurdle here, right? I think that's the next hurdle here. I think until we see this positioning kind of flip, you have to lean bullish, but you got to be a smarter bull. You got to look for areas that are off some digestion instead of chasing 2-week straight rallies, right? You got to be a smarter bull. But I think net, regardless of the indexes, whether they chop around or they stretch a bit, you may get a little of both. I think you got to look for opportunities in other places here. The way the setup is right now. Again, outside of something entering the picture here, which certainly can, that just we don't see right now. Yeah, the China, it's nuts because you think about it, right? This China, people have been buried trying to pick a bottom in China, right? Because what they've been trying to do is front run the PBOC there, right? They kept saying, all right, the Fed is going to start cutting, right? We already see the Fed getting involved. And people were saying, China is even in a lot worse shape than we are. So, just looking at it common sense wise, you would think that they would light the fuse, right? But they refuse to do it. They refuse to do it, right? Even fiscally. And their economy and everything there has just been a disaster. So you have a lot of China dip buyers that really have been demolished. But interestingly enough, just recently, and if you remember, we talked about it, those 13F filings, you had a lot of big shots start to dip their beak in Chinese stocks, right? Tepper, the dude from The Big Short. So you had some decent money feel that, listen, enough is enough. Kind of the worst is already priced in, and maybe, it don't improve drastically over a shorter period of time. Kind of the bulk of the selling may be done here. So that was their take, and they happen so far to be right here, as we see. But the chasing here doesn't surprise me because, you talk about an overshoot to the downside. Nobody wanted to be in that market for good reason. I mean, Kathy Wood got shaken out of that market, for Christ's sake. Even Kathy Wood got shaken out. There was, for good reason. There was no reason to stick your beak out and get long in any aggressive way China the way things were set up. There was no reason. So now a lot of people have been waiting for that trade, for that setup, and you get, we see it here in our markets. It's and not even as drastic of a drawdown. These Baba looked like it was on the path to zero if it continued another 6 months the way it was going. Right, went from blue chip to escalated down mode for the last few years. So is the bigger question is this it? Not only is this the bottom in China, is this the start of a potential uptrend in a sense? I think that's the more important question. And we will learn more about that off weakness than strength, right? This chase doesn't surprise me one bit because nobody is long China. Nobody. There's no exposure there. So now do they take advantage of that weakness to add long exposure, or does the weakness take control of them? Here's the other thing, right? Think about this. If Trump gets elected, he's not really pro-China, right? You got tariffs, you got all that you got to deal with. So it's going to be fascinating to see how that all shakes out into the new year. But in the meantime, trading-wise, there may be decent trading opportunities in these Chinese stocks now. You don't have to put a ring on their finger. Look to trade them. But I think you still want to do that off weakness rather than chase these moves. Like already, it's only been a week of flow, and I have no idea what's rolling. You know what I mean? There's been so much flow in FXI, EEM, BABA, ASHR, KWEB, JD. So much flow. PDD. All these names. They annihilated all of them. So you really don't know what's new betting at this point. You really want to look at things when there's some selling there, some profit taking. You see some aggressive buying come in, that could be a decent trading opportunity. But yeah, it's never an easy. Yeah, exactly. You took the words out of my mouth. It's never an easy play. China's never an easy play. I can promise you this. Okay, there will be some negative, scary news out of China if you're long that will try to shake you out, and it will definitely be scary news. I can promise you. There will be news that'll try to shake you out. Look at this. Like this here. Like you see something like this. Like I'm thinking we could even see something like this at the least out of these markets, where kind of they continue to support pullbacks for a good few quarter or two. Okay, but look, even that failed here, right? And that was in a bullish equity environment. This has been one tough cookie, this China. One tough cookie. So we'll see. I don't like to. Again, you're gonna play China stock. That's fine. The best way, in my opinion, is through options, putting in what you're willing to risk and premium. Because buying equity, I wouldn't do it. Buying equity in these names, we don't know what these companies are up to. We don't know what the government's going to do tomorrow. You get one headline overnight while you're still tucked in with your teddy bear at night in bed, okay? And you wake up in the morning, you might see whatever you're in go to peanuts, evaporate, looking coffee style, right? That's the risk. That's the risk, right? This kind of government would it surprise you in a month or two from now? You get a negative headline with the China government and Baba or something to that effect. It wouldn't shock me one bit. So I think right now it's the new kid in town kind of, right? You kind of had this mega cap trade that like I said, everybody's already in. Everybody's already in. So, there's people starving to look for something new, buy something new. And now you got this China, China opened up a whole new market here. And you got that excitement because nobody's in it. But me, I'm a lot more focused on, the U.S. equities because there's so much out there that I wouldn't say is in the same shape underexposed wise, but has been neglected that can start to see interest. And for those of you who even want, the China trade, but want to stay with U.S. equities, you have that as well. I'll give you an example. Okay. These casinos, unfortunately, they've been lumped into that China bucket. Okay. They trade with the Chinese stocks. This win has been an absolute menagerie. LVS. Okay. So if the PBOC and the government's going to start to play ball there, you could see some of this type of stuff start to get more attention, right? Where they start to support dips. You're seeing materials, right? The Freeports of the world and stuff like that. So you don't have to solely focus on China stocks to try to take advantage of these things. But I think now, my point is this. Now they've all ripped, all of them. You're not going to find anything that hasn't. They've all ripped, right? Like this name, if you guys remember a couple webinars ago, because it was one of the few newish names that caught action. Look, that quick. This TECK. It's more of a commodity name. So, but that's where I would focus on eventually once we get a little digestion here. Yeah, Cat too. Cat would fall in that camp, these are all industrials, big industrials. These things have been strong. These things are strong. Like, look at this Cat. This thing looks insane, right? This thing hasn't struggled. This thing's been a great stock. Healthy consolidation, another breakout. You're getting, some of these industrials, it's amazing, some of these moves. Amazing. We're seeing more and more of these industrial names break out and catch flow. They're not the ideal type of stocks that a lot of us like to play. They're at times they can be slower movers. The options, for those of you who trade options solely, aren't as liquid. A Cat is. I'm talking about some of the others. So that's the problem there, right? They're not that sexy new underbelly growth theme that a lot of us like to look at. But these look great. These look great. That's that's the question. I think you hit the nail on the head. What's left to buy? Okay. And the only thing right now that's out there, and I'm not even aware of names per se, but I think the only thing potentially that's out there that has a pretty decent, a favorable risk reward for swing trades, let's say, I think is going to have to come in the underbelly of the market, right? And what I mean by underbelly, it's not these blue chip leaders. You understand? We've been in a market where when big tech, mega cap tech runs too much too quick, they pause, they breathe. You see rotation into the big financials, right? Then you see rotation into the big industrials. And it's been this constant recycled rotation basically amongst the leaders of the market, the leaders of companies, the largest market cap quality names. So I think where the opportunity is, if they start to get attention, is that underbelly, right? That underbelly new name type of market that we've been discussing. These type of stocks. Right? They're not mega cap, right? They're not already owned in every fund. Not everybody knows who they are. And when they start to, and again, I'm talking about flow because that's how we usually pick up on these names. When they start to see flow and Wall Street's eyes are on these names, it's usually for a reason. Usually the fundamentals are starting to kick in, right? There's growth there. AI, it's an AI play possibly. That I think is the sweet spot of the market. That's what I think is the sweet. That's what this market has lacked, this bull market in its entirety. So to your point, what's left to buy is, in mid cap, even large cap, but mid cap, small cap land. Now, again, small caps, they've had a tough time as a whole. It hasn't been the best climate for them fundamentally. So that's why they can't really get out of their own way. But I got my fingers crossed. Little by little, we're seeing some names poke up here and there. I'm just, again, I don't want to jinx it. You guys know I'm superstitious, But these are the type of names, These are the type of names right now. And the reason why I say that too is because of that AI theme. Okay. If you are a bull, right, on AI just in general, and you think there's a lot more to go, right? A lot of people say that this AI thing is just getting started. You're going to see a ton of these type names get attention. A ton of them. Right? Right now, the only things really that have been bought up have been the semiconductors. Okay? And now we started to see some of these power related names, data center plays, have been getting involved in a big way. But if this AI thing is just starting, okay, again, whether a correction in the overall market comes before that or not is irrelevant. If this AI theme is just starting to get going here, you're going to see a lot of small to large cap, not mega cap, small to large cap, new leaders, new names. That's where I think the biggest opportunity is. And you guys know, we talk about it every week. We reminisce. That's where I think the biggest bang for your buck is, if you happen to catch these names. These guys, the APPs of the world, right? The VRTs of the world, the VSTs of the world. I mean, this is not really AI as far as I know, but the shark ninjas of the world. Okay. You see this other animal here? Duolingo. Right? More of these type of names. Now, Now, because there's been so little of them, as soon as a name gets spotted, as soon as the street recognizes a name, they gun it. Look what they did to this thing. Okay? From August at $150, they took it to 300. Did you hear what I just said? $150 to 300 basically in a straight line. Okay? Once this got out that there's an AI play there, and not only that, there's real growth. There's real fundamentals there. Okay? Because see, that's the other component that's missing. When you're in a QE type of market, think about post-COVID. Okay? Think about the COVID rally where nobody cares about fundamentals, right? Give me Lucid, give me any EV stock that you can SPAC away, give me anything. Kathy, what she buy yesterday? Great, let me buy some of that. Fundamentals, nobody cares, okay? Because the Fed is saturating the whole entire game with liquidity and money. But when you get into tighter liquidity environments like we had, that's where fundamentals matter. And these institutions aren't just going to buy a story. They're going to be really selective, and they want to buy where there's real growth. And if you look at every big winner, right? We talk about this all the time. Every nice winner out there not only is more than likely a profitable name, but they have explosive growth. Okay? So as the liquidity environment starts to get better, those standards, they start to loosen a bit. Okay? You don't need that sexy fundamental story when that liquidity environment starts to improve. And that's where you'll see some more of these mid caps and small caps start to get involved. But right now, there's been so far and few that once they get their hands on it, bing, bing, they take it from A to Z before, like nothing, like it didn't even exist. Like it didn't even exist. So, but again, that was the long answer to your question there. What's left to buy? It's these type of names that I think, and again, we're biased because we're looking at the sweeper activity. But if you see sweeper activity in a name that's in this sweet spot and hasn't exploded yet, I think you got to take a shot. I think you got to take a shot, especially if you like it, because you have no time to think in these things. Lucci, I don't know. I think he was shorting it yesterday. I think he was trying to short it yesterday. I don't know if he held it overnight. But you know what this thing is trading at right now? And again, I don't know what the growth is going forward here. But you're talking this thing trading at like 250 times earnings. Yes. They're raising price targets. Insane. What else is there to buy? Okay, that's a great question, because I think on a name-by-name basis, I think is the way you have to try to approach the market right now. On a name-by-name basis, okay? You have to, because there are stocks, even in the same sector, that used to be highly correlated, went up and down together. They're moving in different directions. Now you have an SMCI, which is going to zero, and you have an IBM, which is at new highs, right? So you got that type of dispersion in the market, and I think you have to look at things on a name-by-name basis. But there are a few names, again, may not be your cup of tea. That's what makes it, you got to be a little more patient. But you got names like this. We saw some action in, looks interesting, GEHC. This is GE Healthcare. All right, probably could use a little bit of a rest here now, but not much. Breaking out to new highs. Anything with the word GE in it has been incredible. They bought some Marriott today. That looks good. Again, could use a little rest here. But that looks like it's going for a breakout of highs. You know what was another great stock? This DD. Look at this explosion. They're going the GE route, if I'm not mistaken. They're going to start to break up the company, spin them off. You know, but this thing's just was breaking out there. So that's it. It's on a name by name basis. You know, listen, you're preaching to the choir. That's been my issue. You got to take it on a name by name basis, and they may not be the type of names you like, right? That's been my main issue. If, like, let's say, for example, you know, these $800 stocks and these mega cap names that are well known, I don't play these things. I rarely ever in my career played these things unless they were dead, out of favor, and they started to see action. You know, now it's the complete opposite. So, you know, when all the actions in these names, I'm not playing them. But here's a good example. Okay, here's an example. We're talking about trades here, right? They don't have to be buy and holds. I think for that longer term perspective, okay, that intermediate term perspective for that sweeter risk reward, kind of what we were looking at up to now on this webinar, okay? You want to look, like I said, that sweet spot underbelly, okay? That's something that hasn't exploded yet, seeing flow that possibly has some AI ties, right? Software may be in that space right now we've been talking about, okay? But that's more of, again, buy and give it a little bit of a leash. Trading wise, I think it all comes down to spots, okay? I give an example here. AMD, all right? Name you guys follow, many of you follow, okay? You guys know, especially in a lot of the semis, I've been complaining about the flow in AMD. Right? There hasn't been anything worthwhile, anything worth even looking at. And I don't know, what's today? Thursday? So when did it happen? Tuesday? I don't know. Earlier this week, there was a round of aggressive buying. Okay? I think it was November 4th, so not too far out. Aggressive buying, clean as a whistle. Exactly the type of action you want to look for in an AMD for a trade, right? So that's what I'm saying. There's your trade, right? You get some real action in it. It comes in at a half decent spot. There's your trade, all right? Or, you know, the Tesla, if you want to go back a little bit further, okay? Yeah, when Tesla's rip roaring higher and the call activity looks like NVIDIA, everybody wants to own it. I get it, okay? But you have no edge off the flow in that type of environment. I'm sorry to tell you, there's no edge off that flow, okay? There's going to be call buying. I guarantee you there's going to be call activity, right? But when Tesla gives people a tough time, like it has, there are spots where if you see some cleaner call activity come in, that's where you want to fire, right? And again, if I remember correctly, I think they were February calls, came in, decent spot, action was clean. I threw it on the top bet list. You don't have to trade it, but if you're eyeing Tesla for a trade, I think that's where you have to fire. So again, just to answer your question, what do you buy? Not everything has to be a put a ring on the finger and make love to it type of scenario. You know, you could trade things. Right, you had the LW, the French fry play. That caught some nice action. I doubt anybody's interested in buying that, but you know, you have to pick and choose your spots. You know, you have to pick and choose your spots. That's, I think, that where we're at right now. All right, I'm trying to come up with the right words to get my point across. But for those of you in the steam room, you're looking for that cleaner action at decent spots. Decent spots meaning you don't want to see that action come in after the stock ripped for a week straight. Okay? You have Tesla has pulled back and is sitting around here, and now all of a sudden you see me calling out some good-looking Tesla buying and putting it on the top bet list. If you've been eyeing that name for an entry, that's where your entry is off the flow. That's where you have an edge off the flow, I should say. Okay, that's the better way to phrase it. But the opposite of that would be you're eyeing Tesla for a trade, and you see a couple weekly sweepers that I don't even mention come in, and you make a play off those bullshit weekly sweeps. You understand? That's the difference. You have no edge off that. Now, you may see something you like about Tesla on a chart that has nothing to do with the flow, but then you shouldn't, the flow is not that important then in that case. Right? But if you're looking for the flow as a catalyst, you want to see good-looking action at decent spots. That's the goal here. That's the goal. All right? And now, same thing, right? Now, Tesla, you've had a nice rip here for a good week plus. Okay? Whether Tesla goes higher, and I think Tesla, I don't know. My gut tells me Tesla is in decent shape here. I think Tesla net goes higher. But does that mean here is a decent entry? Absolutely not. Absolutely not. Yeah. Again, I'm talking off flow. These are the spots that I would be looking, right, for quality action. Not here. Whether the stock goes up from there or not is irrelevant for what I'm explaining here. From what I'm explaining. A-Lab, there's been a little bit of action there, but nothing really nothing that's really got me excited. But there's been some bull flow there, and it's had a nice move. You had some October flow. If you remember, that's what we spoke about. There was some October buying, and you had November buying most recent here, but they were rolling out those Octobers. So, again, you've had some flow. You had a nice bounce, but you've also had a pretty big move here. What's it now? Here's a name, too. Might be interesting to keep an eye on. CART. So, you guys know we talked about this name in the past numerous times. Here you had a rip to new highs, kind of, almost new highs, and nice healthy little breather here. Again, upside niner, so many of them, see? But into this move here, you had some decent looking buying with time. I forgot what month they were, but it was out there. So I should say quality buying, right? You had quality buying into this rip here. So look for a little digestion here. And, if you see action into this digestion for a trade, that's where you would look. For something more than a trade, you got time. So you may want to piece in. But it had some interesting action. Last week, I think it was, right? I don't know. I can't remember times here. Last week. Zeta, that's been a big winner, no? Yeah, this is kind of what oh my gosh. I didn't even realize. I remember the last time I looked, it was already a big winner. But yeah, this is kind of the type of name I'm referring to. What a move. This Zeta. Let me see. What other what was on the top bet list I threw? I tried, I'm trying to, if they're new names, even if I wouldn't throw on the action on the top bet list, if it's a new name, I'm trying to put it on there. Just to even keep track of these things. So you had Marriott. You had one bull bet in this Wolf. This is more of a cyclical semiconductor that's had a lot of trouble. But you could see some of these things start to outperform. Not this one per se, but Texas Instruments and stuff. So this is more of just a dead cat bounce type of play here. They're buying October 9s. As you can see, pretty decent order. Just one order, but decent order. What a menagerie. Look what they did to this thing. I remember this thing was a pretty good stock once upon a time. Woo-wee. So you had Wolf. We talked about this Marriott. I could use a little bit of a rest, but a real nice setup. June, so they bought with time there. Root, this is a small order. It doesn't catch a lot of flow, but if you like the name already, oh my God. And you're off a pullback here. So that's why I probably threw it on there to begin with. All right, so spot-wise, not too bad. What else we got here? This is an interesting name. APLD. So we've been seeing action in this name. I think this might be a SPAC. We've seen a couple of these SPACs. I don't really like to play SPACs at all, but if you don't mind playing them, we've been seeing a couple of these names that have looked good. APLD is here you have November 4, deep in the money calls that caught some play today. And there's been action for the past week in it, more speculative. But today they went deep in the money. So interesting that it's only an $8 stock. And if I'm not mistaken, this has some sort of whatever AI data center ties, right? Let me see. I think I read this today. Here it is a designer, builder, and operator of next-generation digital infrastructure designed for high-performance computing. Earlier this month, APLD shares soared 65% after the company announced a deal with NVIDIA to bring its data center and GPU cloud solutions to scale. So they signed a deal with NVIDIA. That's a good reason for the little push here. All right, so what they played today? November, deep in the money, $4 calls. There were a few of these. Roku, again, just one bet there, but not a bad sweep. There's the Roku, has been acting a little bit better. There's hockey stick names. There's been a few of these hockey sticks that have been acting well, right? UPST. There was some good-looking buying in Leaps, and then we've seen some more speculative buying that they've been supporting the name in. DraftKings, there's been some decent-looking flow. Some of these hockey sticks, we call them hockey sticks because of this, right? For those of you who don't know. Again, for trades, you may be interested in them. To hang on to these things, you're going to get an ulcer. They're not easy. But anyway, November 75 calls, opening bet, Roku. Off a little bit of a dip today. LRCX. This was into strength, which I hate, but what are you going to do? Into the gap up. Here was the line they were hitting in LRCX. October 4th, 900s. They hit them early morning, and it looked like they were adding them late afternoon. See, look, 7 and change, 8 and change, and then almost $11. Jesus. So again, that's short term, right? Next week. That's next week. And Texas Instruments, again, it can catch a lot bigger action than this, but I think it's a name to keep an eye on. Has been a name to keep an eye on. These may be the semis that outperform. These are the more cyclical semis, right? The semis that have had a tough time because of China and other shit. Some of them have really acted well, like Texas Instruments. But this is more of a short-term sweep. More of a short-term sweep on there. Yeah, some interesting names. This Marriott's interesting. This APLD is interesting. A little bit hot, but interesting. Snow, forget it, right? This thing, I don't know. I mean, I haven't seen any flow in it, but is this thing ever going to bounce, for crying out loud? Once in a while, as you know, we'll see like one sweep. Half decent type of sweep, but you want to see them come after it. You want to see that appetite there. It has to, and it can't go straight down, right? In a straight line, for crying out loud. It's got to be a bounce somewhere, even for a trade. But that's what I would look for, Sahil. Maybe some of that rapid fire appetite, kind of like what we saw in AMD the other day, or even your Tesla. Kind of that appetite there. Give it a little bit of a flip the momentum a bit. But to your point, and it doesn't have to be snow, but that could be the next place. These software names, people are starving for new AI stuff. Starving. Even now this power trade has gotten a little over its skis, right? Like people are starving for a new AI theme. I think that Duolingo, that's what that tells you. That double over the last month tells you exactly what I'm trying to stress here. If they can find this sexy underbelly software theme, that can really get hot, and those things can move. Those things can move. But here's that power trade, right? Like, look at these things. They're just machines, money printing machines. Anybody buy, Reddit? I haven't seen any flow there. Reddit's always a name I'm interested in playing, even just trading. There was you can see the circle here, a little bit of action there, right? You guys remember what was the action in Reddit? I think it was like short-term stuff. I don't think it was anything major. Yeah, well, that's what we were that's what we were talking about. Basically, what's left to buy, and I think right now it's got to be underbelly. 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 Unless you get, maybe some of these heavily shorted areas, you can see a squeeze there. Especially if this is going to happen. Like, I think this is what's coming next. Right? See this explosion? That's coming next. It may have already started with China and some of these cyclicals. But underbelly, and, a lot of people I talk to that kind of, look for the same type of stocks we like to look for, Sahil, those underbelly new leaders. That's what they're looking for. Software, app-related AI stuff. They think it's going to be big, and they think it's only a matter of time. And they're licking their chops. They're licking their chops. Like you see this Duolingo. This thing wasn't an AI play, right? It was the translation of, I could talk Japanese and it could translate it to you. But now, I don't know if you guys read the news. This thing is like a whole different animal now. Right? Did you guys read what the hell they're doing here? This is not just translating voice thing. Where is it? It's over here somewhere. Hold on. It's heavily shorted. Look at this. Short squeeze brewing. The thing's up 100%. What do you mean brewing? Where is shoot, I never find it when I want to find it. Here it is. Unveiled a new video call feature at an event that it was at that lets users have, here it is, AI-powered conversation with Duolingo character Lily that stimulates natural dialogue. You know? And listen, I'm not saying the technology is something special. You guys know I'm tech illiterate. I'm just talking about guys I know who, brokers in the business, managing a book and looking to build positions. They're looking for growth in this part of the market. My LinkedIn says I am 1% fluent in German. What's up, Khalid? You're fluent in degenerate ball games. That's what you're fluent in, Khalid. Degenerate gambling on the ball games you're fluent in. AI stimulation, right? See what I mean? Just those two words will get you all riled up. So we'll see. So he was saying CDNS. Oh yeah, I know that stock. That was a big winner too. This is software CEO CDNS. Yeah. Oh man, if software can catch fire, there's a lot of underbelly stuff there. A lot of underbelly stuff we can make some money in. A lot of underbelly stuff. FLUT. Madden, that's FanDuel. That's been on fire. FanDuel. Look at that. Yep, and DraftKings too has been pretty decent. DraftKings too. So, what do you guys think, Sahil? Maybe these, DraftKings has moved. Maybe some of these names, maybe it's the last move before maybe it sets up some sort of pullback and rinse. Maybe it gets hedge funds to cover. That would involve software too, by the way, because software is heavily shorted. If you guys like big cap, mega cap software, we saw a little more flow in Salesforce, CRM. Anybody like Salesforce? Look at this. That's where we saw that put selling. If you like these names, if you like trading the big guys, those are the opportunities. I know it's easier said than done. Trust me. I understand that. You hear that. I always say that. You guys know. But if you like trading these big names, some of you that aren't in front of the screens all day trading and aren't as active, but you want to trade, the larger mega cap names, you get a move down like this and you get some put selling and decent call buying coming in. Again, it's not a guarantee you're going to make money, obviously, but that's what you got to be waiting for, in my opinion. Yeah, it looks like this thing looks like it's ready to go from here. So there was some more flow today, January and March buying. But looks good. These software names, again, they have room. There's a lot of these names that have room. So that could be the final spot here. Anybody still holding on to gold? That's what I wanted to talk to you guys about. Gold, what are you doing? What are you guys doing in gold? You guys know I'm out of the miners, right? Well, I got the spec miners, but out of my ETF positions, I'm out of the miners. I have a couple spec miners, cheaper price miners. But I'm still holding GLD. I'm curious to what you guys are doing. Anybody been in gold for a bit now and make a move recently? Yeah. The Bitcoin miners, Sahil, I got the same ones. BTDR, which was the newest position I took, and BTBT. Those are my two full positions. And the other stuff are trimmed from the last move. From I got some wolf. I got a little bit of hut left. I got bit farts, BITF. But those are all trimmed. They're not full positions. They're trimmed from the last go around. I was trading miners and GDX sold too soon. Yeah, listen, for me, that's the story of my life. I held as long as I could possibly hold. I was fortunate enough. What I did was I had Nugget and J-Nug, if you guys remember, right? I own Nugget from here. Okay. Oh, look, the circles are still up here. See, that's why I draw them. They do all the work for me. So I bought Nugget and J-Nug here. I sold the Nugget here. Okay. With the intentions of buying it back, but I ended up buying, with some of the money I bought GLD, I added to instead of buying the miners back. So I have no exposure to the miners now. I have this. It's really cheap though. Ooh. I have this guy. I own it like at 275, I think. This BTG. Again, I've been in it all this time here, from here. And the other one I got is this one. And they're really slow though, This one's been better, but slow. HL. But this HL, I should have a lot more than I have. I don't have enough to get excited about. But I'm holding GLD, and I'll be honest with you. I want to sell, but at the same time, I don't want to sell because I want to sell, but I want to get back in. And I know that if I sell, I will not get back in. You understand what I'm saying? You guys know what I'm saying. So there's a couple different routes I could take. I could sell half the position. I could sell kind of like what I did with the Bitcoin miners. I could sell 3/4, 75, 80% of the position and hold a piece. So at least I have something if I don't get back in. But, I don't know. What am I never going to sell ever? And the funny thing, Sil hit the nail on the head. He's like, what's your exit strategy? Forget my exit strategy was to sell a long time ago. Forget my exit strategy. Yeah. Well, here's the thing, right? If you're bullish on anything out there right now, you got to be bullish gold. Okay? That's kind of the setup for gold, I think. And again, I'm not a gold fan. Okay? You'll never see me buy gold in the gold miners. Very rare. Very rare. Just because, they trade with gold. I'm a stock picker. They're not my cup of tea. But you just had a setup there where it was just too good. It was too good. Right? The bearish scenario for the market was bullish gold. The bullish scenario for the market was bullish gold. Okay? The flow was bullish. And ironically, the best part of it all, the ETF flows, it was seeing outflows. So you had all these positive dynamics at play. You had the price action looking good, everything looking good, and people were coming out of gold. It was seeing outflows. That's too good of a setup. It's too good of a setup. Yeah, Bitcoin. See, here's the difference with Bitcoin. And again, I'm no Bitcoin guy, so as you know. But the Bitcoin is The reason why it's different than gold, I think, is the speculation part. When I said you had both scenarios that were bullish gold, the bearish and the bullish, right? If equities was bearish, bullish gold, equities bullish gold. I don't think that was the same for Bitcoin. You know, if you kind of had a problem here in the second half of the year, especially liquidity wise, Bitcoin, could have been in big trouble. Where I think gold would have still outperformed because it's a flight to safety type of play with everything going on. So that's I think the big difference, the speculative part. I think it still is. I think it still is that. Look, I'll show you. You look at like risk appetite, right, and stuff like that, guys. And maybe this is, you guys got me thinking like maybe this is the last piece now that we're going to see. How do I go to this? There we go. Okay. So looking like risk appetite, right? You would think it's up here. Okay. But in reality, it doesn't feel like it's up there, right? Bitcoin's been range bound, small caps can't get out of their own way. There hasn't been that spec appetite out there. When you're seeing that speculative appetite, you see it up here, right? You see it up there. So maybe that's still to come here before we get a nice wash. Here's risk appetite, different asset classes. Like, look at this. So that's the thing here. I think Bitcoin is so liquid and highly levered, you got those swings, but I think should be safety just like gold. So let me ask you a question, Sahil. And again, I have no idea, and that's why we're just having a discussion. Here's my question: if you get a market correction, okay, equity correction, can you think Bitcoin will see a flight to safety? You know what I mean? Like, if you see a lack of risk appetite, I think you're not going to get upside in Bitcoin. I could be dead wrong, but that's just how I felt about Bitcoin. It was different than gold. Oh, I thought you were asking me now, like what, the difference between them. Why would I buy gold and not Bitcoin? That was kind of my logic there. If I felt Bitcoin was going to explode higher, right? If I felt Bitcoin had that decent upside, like I felt gold did, where I wanted to give it a leash, I would have to be really bullish on like risk appetite out there. I wouldn't make a play on Bitcoin for safety, me personally. Even though I know people look at it, right, as kind of a safety play against currencies and stuff like that. But I think it's just, I don't know, maybe over time, it could end up becoming that. Right. So that's what I mean. Like if there's a lack of risk appetite, you're going to see Bitcoin weak as well, where you can have a lack of risk appetite and a flight to gold as a safety play. And honestly, I think that's what we've been seeing. That's kind of what we've been seeing. Like we've seen a lack of risk appetite, especially on the speculative side, and gold basically look as strong as it ever has. So, but again, who the hell knows? You know what I mean? Nobody knows this shit. We all think out of our ass, and it ends up being the complete opposite. Any thoughts on energy? Again, I'm just going to tell you off what I look at, because similar to currencies and gold and commodities, I'm not a big energy fan. When energy was in all-out bull market, I couldn't get myself to even trade a lot of these things. I'm just not a big commodities fan. But positioning wise, okay, you have a setup in energy very similar to what you've had in China or utilities before the move or anything else. Okay. You have now, wait. Are you talking about the stocks or are you talking about crude? What are you talking about? Because there's a little bit of a difference there now. But you have hedge funds short crude right now. You know what I mean? You got hedge funds short crude. And that should keep a bid in crude. If you get, for whatever reason, if there's any positive news and they're forced to cover, you're going to see decent upside. You know? So I think if you play crude, if you're interested in crude, I think you gotta pick a spot here off weakness. My opinion. But again, disclaimer: I'm not a crude fan. I don't trade it. I don't trade it well. I'm just talking strictly off the stuff I pay attention to. Yeah, nat gas is a whole different animal, though. I would have never played nat gas ever. Like this thing is just forget it. Boyle, there was actually, believe it or not, there was call buying today in Boyle with time. I think there were March or June calls they bought, but there was buying. But here's the problem. A lot of times the call buying in Boyle is to hedge short positions in that gas. You know what I mean? They're not directional bets. That's the problem with the flow in Boyle. So again, nat gas is a whole different animal. As you can see, nat gas is in a league of its own. I just think I'll show you here. And I think crude, again, you get Trump elected. I think that's bearish crude. If you're thinking the economy slows, God forbid a recession, that's bearish crude. So there's definitely things not to like about crude, but I think that's why everybody's bearish. That's why everybody's short. So that should be enough to put in a floor and potentially a squeeze. But let me see if I can find it for you here quickly. Hold on. Oh, come on. I got to learn to tag everything I post in the room. I was going to show you the positioning chart I had somewhere in here, but pretty, everybody's short. And, you got a pullback here in crude. So that's where you shouldn't chase strength. And you got a pullback. This is pick a area here where you're looking for an entry. And stock wise, we're not really seeing much of any flow. This BP caught some cheap action for this. Oh my God, I didn't even see that. When did that happen? Today and yesterday? Jesus. There's really not a whole lot of action to like here. Today, Chesapeake, that's the only bull flow I saw today. CHK, there was some call buying here in Chesapeake. This is not that bad looking compared to some of the others. Oh, you're talking about the ETP place. What's another one? This one. EQT. These are all pretty decent if you're looking for the dividend. What's the other one I used to own? I can't remember what the hell it was. I used to own one. I made not bad money too. The stock went up pretty decent. That's why. What the hell was the name of that? Oh God, I'm drawing a blank. But yeah, these are these are things you kind of want to hang on to. By the way, speaking of ET, the insider over there, the CEO, has been gobbling up stock for like the past what now? I don't know, 2 years. Oh, you work there? Oh, so yeah, that's funny. I didn't know that. Yeah, insider buying galore in this ET. Galore. I'm talking about a lot of insider buying. You had a chance if you liked it to build a position in it. You got a dividend. The stock really couldn't get out of its way for a while, but now, let's see. Look at this. Nonstop, guys. This was August, late August. Oop. What the hell? Bought another 20,000 shares. Buys a lot, right? Oh, what do you mean they had to buy, Sahil? Why'd they have to buy? Because it was so cheap? Because it was so cheap they had to buy? Why'd they have to buy? But yeah, look, that's been a nice run. What's the weekly look like? Because this thing was higher than this, wasn't it, in the past? Wow, no? Holy shit, I didn't know this is all-time highs. Damn. Wow. Yeah, that's a nice move with the dividend. We bought a couple of companies. There was something where we had to buy shares. I didn't know that. So let me think of a couple other names that looked interesting. Again, a lot of them are names you guys are well aware of. There's nothing, under the radar. Oh, Home Depot. What? I'm like Madden. Look at this. Again, another name to the point you were making earlier could use a little breather. It's actually trying to pull away from a niner here. But this Home Depot looks good. This Home Depot looks good. You got to be ready to pounce off pullbacks. I know I'm bad at it too, guys. Not bad. I'm bad at it. I'm not going to sugarcoat it. I'm not good at it. Like when stocks do this, I don't know why, but I'm not as I don't have the conviction that and not that I should have, but that you would think you should have. A name like this, okay, that's starting to see some nice action. It really, risk revert. It's starting to see real action. This Home Depot, right? You gotta. That's where you gotta look. If you're not holding on to it, obviously, if you're looking to trade it instead of hold on to it, you got to try to take advantage of these pullbacks. I'm not as comfortable. I like, this is what dead heartbeat. That's what I like. I like, let me give you some examples. That. See that right here? Isn't there a highlighter on here? Hold on. Magic? What's magic? What the fuck is that? There's no highlighter on here? I guess not. Anyway, you see dead heartbeat? So this is what I like. Okay? Dead, now they start sweeping it up. Okay, I start to pick up on accumulation here. Coming off this, I love it. I love it. Yeah. Exactly. Now, again, not some people think like, and that's where I'm not as efficient and I don't do well. I'm not good off consolidation, short-term consolidation up here. Like I like, yeah, to your point, bases, right? I guess that's the way to put it. Yeah, exactly. A lack of attention, no attention, no interest, nobody's looking, nobody cares. And then, to your point, girl trader, the flow, the sweeper activity, when I pick up on it, that's tipping me off to volume coming in, right? So without flow, you're probably looking for volume to pick up, correct? Like that would be your indicator. See, the flow for me front runs the volume. It tells me that volume is coming. But yeah, I'm on your page. That's my favorite. Those are my favorite setups. And again, think of the market we've been in, right? Like you look at the market we've been in, and again, I'm, here's a better one. This is anything but that, right? Like, look at this. Up, 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 Yeah, I like, and even guys, even the names you trade, it's just, you can't get too greedy unless you see something else. I'm saying you can't get too greedy off the flow. But see here, like the Tesla point, right? Like we were talking about weeks ago. You were bringing it to my attention, right? Like Tesla, everybody don't like it. It's a tough stock to trade. When you see sweepers, good-looking sweeps come in dead spots, like that's your place. Where I think risk reward wise, it's ideal. Yeah, and that's the key. Sahil knows because he's been in the room a long time. You can't. It sticks out. Okay, like the other day, even Nvidia, when they came after Nvidia and AMD, I don't know who was around. Any of you guys were around earlier this week when they attacked those names. You couldn't miss it. Like even me, okay, even me, I don't play those names, and I played both those stocks day trade wise. I played Nvidia via this thing, and I traded AMD. I had to. I couldn't, because like you see that type of action, I just want to get in the middle of that because I know that it's going to bring some momentum there, and if they keep coming, but to CEO's point, you can't miss it. I got a tickle cough that's driving me nuts right now. Hold on. Where is it here? It's coming up. Here it is, right? Like here's the line they attacked. I don't know if you guys could see that, but these are the November 1st 140s. That was the line. November 1st. What the hell did I say? I don't know what I said. Okay, they bought up 5,000 and they paid on an average of $21.50. 5,000 of them. Bing, 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 bing. They came after it. One swoop. Like here, you'll see it. Here. Um, listen, there are plenty of people in the room that can't interact. That's fine. I mean, you got to do what you got to do. You know, sometimes it's better at first you don't interact much. I'm being dead straight with you. You could pay attention more. Sometimes you interact and you get sidetracked, so it's not a bad thing. And then once you are, once you get a handle and a feel for things, then you interact because you learn things from other people. But here's like the AMD action, right? Look at this. 11:37, 11:38, and then they followed with a few more after that. November 1st, well, look at this, 2 million, 2 million, 2. That's different action, right? We didn't see that type of action. Yes, right? See, it happens. I mean, that's not a bad thing, girl trade. Trust me. And once, you got to understand, I'm looking at the flow, I'm looking into the flow just to make sure it don't roll, especially the active names. But once you see this type of language from me, and I'm not going to throw it around too loosely in the bigger names, it's real action. Okay? Again, it doesn't guarantee that you can buy it and hold it for 6 months and it's just going to go higher. But what I can promise you is that type of action, you will see volume swell and you will see momentum show up. That I promise. You can see, right? Fuck, AMD. You got to be looking for it. And if you're around, you'll catch it. But that's the ideal action. And NVIDIA catches more action than an AMD. Like there's NVIDIA sweeps all damn day. So it's a little different. Like NVIDIA, you could tell the difference, but NVIDIA trades a lot more. But if you see it in like Oracle or an IBM or a Salesforce, you have a real edge in these names. North. You have a real edge in those names. If they're not as active, the less active, even if it's an active name in general, if it's not active for a few weeks, a month, and then you see, a wave of buying like that show up, that's ideal. Sahil, do you know the Tesla Fed buyers? Do you remember them by chance? I try to look in search. I can't figure out search. I can't scroll back, I don't think, far enough. By any chance, do any Steamroom members remember the Tesla Fed buyers? I'm trying to think where'd they come in, though. I don't remember how long ago it is. I have no concept of time anymore. I think it was over here somewhere. No? Feb 300. So they were Feb 300s. What was the date roundabout? Do you remember? No, it doesn't have to be exact. Like about a week or so ago? Let me see here. Okay, maybe I should be able to find it then, no? Unless, I could find it on a top bet list too. But let me see if I can find it here. Yeah. Is this it? This is the ones he's talking about. Feb 300s. Oh, that was, okay. Oh, I changed it. Here it is. Thank you, Sahil. That was easy enough. I spent all morning trying to just find the line. I couldn't think of the line. Here it is. So here, look, right? I don't know what day it was, but the stock was 220. So that'll help me out. 220. Oh yeah, so it was around here somewhere. Right over here somewhere. Yeah, 2 weeks ago, exactly. Thank you, Sahil. Oh my God, you don't understand. I spent all morning, I couldn't find it. In 2 seconds, you gave it to me. So this was the action that stood out recently in Tesla. Feb 300s. That was nice action. Good call, Theo. Thank you. I was just curious. I couldn't even. I knew it was February, though. I knew it was February. Yeah. Yep. Yep. That's exactly what they're betting on there. But that's a nice move already, I mean, that's what is it, 260, $40 in 2 weeks on that stock? Yeah, and that was a decent entry, decent spot. Sahil, you still have a longer term position, right? I think you mentioned you trimmed. I don't know, I got a feeling this Tesla is going to get hot, Sahil. Market permitting. Market permitting, I just think it finally participates in the AI theme. I really do. I don't know. It's more of a gut than anything else. Yeah. Maybe we'll get a little bit of a pullback and some flow, just like this year. Again, I just got a feeling, And you know what I was thinking too. Like I want to play through this for shits and giggles. Yeah, not risk a whole lot, not go crazy, but take a little shot with this TSLL and see if I could get lucky. So we'll see. Now that some decent action has showed up, I don't know. My gut tells me this thing's gonna get hot. I'm hoping to get involved. Yeah. Honestly, listen, if Nvidia wasn't as crazy as it is, Madden, I don't mind playing Nvidia via the NVDL. Truly, I'm being dead honest with you. I'm being dead straight with you. I feel like I have very little edge on a day-to-day basis off anything, let alone flow, in a name that everybody's eyeballs are on. Like Tesla, that's why I'm more inclined to be looking at a Tesla now, because I know there are people who aren't interested in Tesla now. Tesla was just as bad as an Nvidia once upon a time. When it had that crazy parabolic move, same thing. Here, right? So Tesla was Nvidia here. Same thing. Remember the flow? Some of you guys, from talking to you guys, some of you guys feel like the Tesla flow was even crazier than the Nvidia flow. I don't know. That's hard to believe. I don't know if I can make that statement. But, you had this happen? Are you kidding me? Okay. That right there, you see this? This is exactly what you needed. Exactly what you needed. The type of amount of flow that was coming into this name, into this blow off top, okay, you wouldn't have a setup in it, a clean setup in it ever again unless it did something like this, in my opinion. It is so much more cleaner now, positioning wise. And listen, guys, it's logic too, common sense, right? Okay, it's not to say Nvidia can't go higher. Okay, if the fundamentals continue to explode and the sector remains strong, it will trade higher. Okay, but when everybody already owns a name, they already own it. You guys, we all look at it through trader view, right? Like a trader's eyes. Traders trade. They buy and sell. Okay? Institutions buy and hold. If institutions are already in a name and have been in a name, right? It gets to a point where they're not going to add and just keep adding to a name. They can't. You understand? They either need a decent correction or they just sit tight. If anything, there's a higher probability they trim into rallies than add. That's what you got going on in NVIDIA right now. Whether you want to believe it or not. Again, doesn't mean the stock craters. Okay? Doesn't mean the stock can't go higher. But that positioning backdrop still remains the same. It doesn't change. Okay? And that was the same thing that Tesla went through. Okay? Did it mean Tesla couldn't go higher from here? Or had to crash from here? No. But whatever institution wanted to position in Tesla was already positioned in Tesla. That's where positioning helps, That's why we keep tabs on positioning and stuff like that. Risk, reward, and probability. Okay? Then you need a cleansing, right? It's not easy to clean this out. It's not easy. This will do it. Okay? This will do it. So now you got a stock like NVIDIA. Now, granted, NVIDIA, you're talking about a bubble type hype in AI. You're talking about completely different fundamentals, completely different growth. I get it. And that's why, this stock is going to be tougher to keep in line. But you still got the same positioning backdrop here. Do you think any institution is not in NVIDIA and in a big way now? Honestly, you really think there's an institution that's not fully sized into NVIDIA by now? Come on. They wouldn't be in business if they weren't, guys. Not only that, they've been crowding in a name like this because they refuse to buy anything else because of the environment. At least when Tesla went parabolic, you had a million things to buy. Yeah, and listen to here, you're giving me too much credit. I'm just looking at the positioning, and that's the way I frame it. You know what I mean? And it's always harder to be looking when we're supposed to be looking, and to not get excited when we're not supposed to get excited. But positioning rules everything around this game, man. Everything. It's just a matter of when. That's the difficult part. Yeah, and for good reason. They should be. If you're managing a book, you're running a fund or a book, and you don't have NVIDIA, you're fired. You don't have a fund anymore. Especially in a concentrated market like we're in. Right? I mean, it's been the pure AI play, the pure semi play. You could say, oh yeah, I own Avgo, I own Meta, I own all these others as well, but you definitely own NVIDIA. So again, I just think the Tesla has a cleaner positioning backdrop. That's all. It's got nothing to do with the company. It's got nothing to do with fundamentals. It's got nothing to do with anything else. And think about this, right? Before any of this took place, right? And then we'll wrap it up because I can yap with you guys till the Giant game goes off here. But think of it as this, okay? Rewind. Before this AI this trend started to catch fire, even like before NVIDIA went bananas, right? If I put a gun to your head at that time, now you got to think back because now you probably won't think is the same. And I told you, give me 3 stocks you want to own to play off AI. I can guarantee you Tesla would have been in that top 3. I know everybody was saying it was in their top 3 back then. Everybody was saying Tesla's one of the biggest AI plays out there. Right? The biggest AI plays out there was Tesla. I remember Kathy Wood pounding the table talking about that. So now I think if you like Tesla as an AI play, you got a cleaner positioning backdrop now, cleaner positioning setup. That if the street starts to recognize Tesla as an AI play, you got a lot of buying that can happen. Well, Patrick, I could yap to the sun comes back up tomorrow. All right, I'll leave you on this note. The Giants are awful, but the Cowboys are laying a touchdown on the road. That line is telling you the Giants are going to get blown out tonight. No? Anybody? What do you guys, do you like, anybody like Giants plus the points? I don't want to hear fans. I want to hear where you're putting your money tonight. And anybody out there betting the Giants plus the points? I mean, well, let me think. I mean, what should the line be? The Giants are miserable, though, so it probably should be a touchdown. Dak throw 4 touchdowns tonight. Oh, man, I could see that. Listen, they look bad against Baltimore last week, right? I heard they look really bad. They look really bad. But the Giants, they're awful. The Giants are pretty bad. Like, if Dallas loses this game, they'll be on suicide watch. A gambling stream. Yeah, we'll talk some gambling. The market is gambling. What do you think we do, JW? We're in gambling all day long, 5 days a week. And you Bitcoiners, 7 days, 24/7. I have, speaking of CD Lamb, I have him on one of my fantasy teams. He was my first round pick, for crying out loud. He's killing me. Oh, it's down to 5.5 the line now? Some money's going on the Giants, huh? Yeah, because that's a lot of points on the road. Like, that's a lot of points. That's why I thought it might be fishy. Ball games. We got to get our fill, JW, on the bowl games, right? No matter what. Even though we make donations constantly, we got to get our fill. Nothing better than losing our money on bowl games. Dallas run defense is awful. Oh, the Giants can't really run the ball. I don't know. That line looked fishy to me at first. Now I'm second guessing it. I don't know. NFL's tough. Maybe I just root for CD Lamb to catch all 4 of Dak's touchdowns, Khalib. Help me out in fantasy. Yeah, well, that's what I thought initially. Dallas, off the bad week, would have looked to run it up if off an awful week like that. That's what a part of me thought. But who the hell knows? We'll see what happens. I don't know if I'm going to bet the game. I might just root for fantasy purposes. I'm better off. All right, my friends, boys and girls. As always a pleasure talking shop on a Thursday with you guys. All right. Enjoy the rest of the night. Enjoy the football game. Tomorrow's Friday already. Another week in the bag. And we'll see how they lay them out mañana. Have a good night, everybody.